If you're currently invested in the stock market, you need to know this. There are three distinct alarm bells that are starting to ring, prepping us for a potential market pullback. And so in this video, I'm going to review with you those three major signs, how I'm actively trading right now to prepare my account for a market pullback, and how you can take some steps to ensure your account doesn't go max loss mode if a decline does happen. So first off, there is a heated geopolitical event happening between Iran and Israel. If you're not up to speed, rockets have been fired, there's been military activity in the area, and this could be the cusp of an oncoming war. When this happens, and I cannot stress enough, this will have an impact on the market. We don't know what effect yet, but it's something we have to monitor because it gives me crazy vibes to when Russia and Ukraine started their conflict a couple of years ago. The market was humming along in early January. It was wintertime. It was good time of the year statistically for the market. And all of a sudden, war happens. Geopolitical events impact the market negatively most of the time when they occur because uncertainty is then ejected into the market. People don't know what to do, where the market's going to go. And so selling starts to happen. Next, door number two, surging inflation. Inflation actually rose last month, and it was reported that there was a small 0.3% rise in inflation, which is obviously not what the central bankers want to see. They have tabled interest rate hikes for the moment, but they have also not started to lower interest rates, meaning there is more uncertainty again being injected into the markets because inflation was supposed to be gone and done away with. And now that it's back and slowly rising, the fear that people are thinking about, myself included, is are they going to raise rates again? Are they going to have to do that and try to curb inflation one more time? If they don't, and they decide to cut rates, does that mean inflation comes ripping back and the value of assets goes crazy to the moon, along with groceries, gas, and everything else, making it even more unaffordable for the average person to live? Again, uncertainty equals a negative connotation when it comes to the overall market. And in a moment, I'm going to dive a bit deeper with some technical analysis on my stock charts, along with sharing my trades that I made last week on Friday to prepare for things to come this upcoming week. If you're getting value so far, though, please smash the like button and let's keep on going. We have already seen some earnings come back with great results, and because of this uncertainty yet again, earnings and the stock price movement afterwards were muted or declined. It's a weird phenomenon that sometimes happens when people are loading up on the information pre-earnings, where they say, buy the event, sell the news, or in this case, it could be a selling due to the uncertainty and the risk that's on the table. And I'm thinking we could see a lot of great earning results that beat expectations, where the earnings do pop, the price does pop, and then it gets quickly pulled back down with the broader market. For example, if AMD has really terrible earnings, and if NVIDIA has really terrible earnings, and the QQQ is being dragged down, even if Intel has great smash out of the park earnings, it's likely that the overall industry and kind of sector is going to pull the results of Intel down. So even though the stock may pop up, it's likely going to get sucked back down and dragged down by everything else, just like a rising tide lifts all boats, as they say. A sinking or a moving out tide will lower everything again in tandem. So this will likely cause the IV or implied volatility of the market, the VIX, everything like that to spike. So as a call or put buyer, be very cautious during this period of inflated volatility. I just released a video, you can check it out right here, about how volatility works when you're buying options, specifically calls, but it's very similar when buying puts. So check that out and understand how volatility can impact you as a call option or put option buyer. Now let's combine some technical analysis with the events in question to really get a feel for where the market may go next. And a couple of weeks ago in my weekly email, my newsletter to my subscribers, I pointed out this very interesting trend. We have RSI down here at the bottom, which is an indicator for oversold and overbought momentum for a stock. When you have a high point like this right here, and you have another high point like this, but it's a bit lower, I'll draw a trend line there so you can see it in green. What you would expect in most cases is the stock price would also mirror that. So at this peak right here, we have this red line right there, and then we should have the same trend line that we see down here up at the top end right here. So the stock price should have done this. But as we can see, it didn't. It actually moved a bit higher and went almost flat or just a bit higher on the upside. This is a weird phenomenon known as a divergence. And when you see this with RSI kind of trending downward, but the stock price trending upwards or moving flat, it kind of raises a red flag in my mind saying, why would the RSI be moving lower when there's momentum that's fading slowly with the stock price moving higher? So I shared this with my weekly subscribers on my newsletter and also let them know that I would monitor this and update them as we went forward. If you haven't joined my subscriber list yet, make sure you go to tradingoptionsdaily.com, link in the description of this video to do so. What this is saying, though, is that there is a kind of disturbance in what's happening versus what's happening in the RSI. And as you can see, we had this very large bearish candle right here on April 4th, right, which was a huge candle, which is probably a precursor to a lower move, although that didn't happen right away. It has now shaken out about a week later. We have just broken through kind of a technical support level here around the 510 area, 511, and we're just barely holding on to this 510 level currently. Now, the other thing that I want to note here is we have a very strong kind of reliance on the 21-day moving average. This yellow line right here is a 21-day moving average. If we go back all the way, really, all the way down to November, early November of last year, you can see that very rarely does the stock price of the SPY break below that moving average. It kind of touches it here and goes below for 1 day, 2 days, then it kind of rips back higher. Then again, one more time, it goes down below for 1 day, but not the continuation pattern that you may expect for a trend to change. It kind of made the points here to kind of tap it along the way, trying to get close to it here. It actually got really close to it here again, tapped it right on there, close again here, tapped it right there, and then tapped it one more time as we got up to the top of this trend line right here, right when we started getting that divergence. Then at the very top end of this trend where it may be topping out, we had this nice, again, strong candlestick where it broke below that 21-day moving average. Again, you can see that it tried to break above it again right after 1, 2, 3 days, and then it kind of dropped back again. It started one more time to get above it, and this right here is the key signal. I cannot stress this enough. That is such a key signal for this movement right here, in my opinion. The market tried to go back and break above that moving average. It got shut out and denied. It actually did break above with this candlestick wick right here. That's what it's representing. And then it was shut the door, moved down, and then the next day it moved even lower, right? We've got the signal candle right there. Then the confirmation candle is the one after it, that this trend is in fact moving forward. If you want to tack on one more kind of thing to make this a bit more strong and favorable, you have some increasing volume in this trend. So I'm really interested to see what the next candle is going to be, even if it goes up and kind of comes back to this level in here. Maybe we're in this little range right there, then kind of trickle lower and start to move downwards. It could happen. It could kind of bounce back up a little bit higher. Who knows? It's hard to say. But my position now that I'm kind of thinking and taking on is that of a bearish move that is incoming. There's too much on this chart that's making me think and see bearish right now. That's how I'm interpreting it. Plus, if we look at the VIX right now, the VIX is the VIX for the kind of volatility in the overall market. We can see that it is slowly starting to spike up as well. There was a kind of push up to 19, which is super elevated VIX, but we're still elevated here at 17.3. The general kind of medium kind of range would be anywhere from 12, let's say, to 16. We are above that now, so we have a period that we are entering potentially of high volatility. As always, I could be mistaken, I could be wrong, but that's the signals that I'm seeing. Make sure you do your own research and do your own kind of hypothesizing to see what you see in the chart before making any trades. So what did I do to take advantage of this? I decided to buy a put on the SPY. And this isn't going to make me rich. It's not going to be a game changer for me. It's just to put a little bit of protection on and see and test my theory if I am right. I went in and I bought a put on SPY when the stock was kind of trading right around this 511 level right here. I went in and I ended up buying my put somewhere around this level, around the 510-ish level. That was kind of my target area. And obviously the price has moved up higher from that point. So I'm a little bit negative on this position as of close on Friday. But what I'm again assuming is going to happen is this market's going to open a little bit lower the next day on the Monday. It's going to drop down. And the further that it goes, lower and lower, the more money that I will make on this position. Plus, as this starts to happen, if it does happen, I will look to +1 and add, and maybe +2 and add, and I will add to my positions as this trend is confirmed. If there are little pullbacks along the way, even better. if the stock decides to go like this and drops for a little bit and then kind of pulls back and kind of flatlines for a bit and then makes a little bit more moves downwards, I will continue to add positions targeting this kind of area right here as the sweet spot to get in. X marks the spot here, potentially for additional positions on the downside. In addition to this, you can see right there in my chart for my trades, I also went into Airbnb and sold a covered call. I have an idea that Airbnb's earnings are coming up, but I don't think that it's going to get above this 185 level before my call expires, which is way up here. If I zoom out, we got way up here. That's where it has to get to at the top end right there in the next, let's call it month and a little bit. So could it get there? Potentially. Do I think it's likely? I do not, based on what I'm seeing on the chart. I don't see a overwhelming kind of area of increase coming up. It may kind of track back higher to this 170 level if it does break above 175, but I think 185 is a pretty high move. So I'm going to capitalize on some covered calls right there. And also on AMD, I did the same thing, and AMD's in a definite pullback all the way down this kind of channel. We've been pulling back. The AI movement and the chip movement was really ripping high with AMD and NVIDIA for a while, but I decided to take advantage of that and sell a covered call as well on NVIDIA. And again, I picked the level right here, which I think it's not going to get to within the next couple of weeks. This is a shorter term option play. My level right there is at 185 yet again, coincidentally, same as Airbnb. But I think this candle right here is a good indicator that it's likely not going to go above this really strong bearish candle. It might get to the top end around 180, 182 and change, but I don't think 185 gets touched in the next 2 weeks. So I'm looking to capitalize and bank about 74 bucks in profit on that trade. So these trades aren't going to make me rich overnight. They are positional trades to hopefully add a bit more return to my account. If you agree with my bearish hypothesis, please let me know in the comments below. If you think it's going to be a bullish kind of market upswing back higher and I'm wrong, I would love to hear your opinions in the comments as well. Let me know what you think. Thank you for spending time watching the video with me here today. And if you want to know more about how to buy options in general, again, specifically call options, what to look out for with volatility, how the market kind of timing, strike prices, and expiration dates all impact your call buying for options, make sure you check out this video right here.